Stock Charts Live. This is Bob Desmond over at the Contrarian Trader. And what we're going to be talking about tonight are the weekly charts. We're going to go over how are we poised to close out the week with one trading day left to go. And that means a lot. A lot can happen in a single trading day. So on Thursday nights, that's when we begin to plan out how we're going to trade this coming week, next week. We're also going to talk about our trades that we closed out this week. Actually, trades that we opened up last week, closed out this week, and trades that we opened up. We're slightly down on one of them, but I'm sure that that's going to be a profitable trade. I should never, ever say, I'm sure it's going to be a profitable trade. Ever. That is not being humble, and Mr. Market will tame you quickly. So I retract that. I am cautiously optimistic we will make money. Airbnb being the symbol. We'll go over that chart in a moment. As to why we entered the trade. We're going to talk about the bond vigilantes and what they are. What are the bond vigilantes? And what are they telling us about yields moving higher? And are they defanging the Federal Reserve? We're going to talk about the Fed's balance sheet. We're going to talk about the banks. What's going on over at Credit Suisse and BlackRock? Big problems. What else do we have to go over? The yield curve. What is the yield curve telling us this month and this week? So let's get to it. Let's just first say hello to people. Let us be as cordial as possible, congenial. Sean, hey, brother. How you doing? Bob, I look forward to what you have to say about this market. Thank you, sir. I look forward to the conversation back and forth. Yoga Mac, hello, contrarians to the moon. I hear you. I hear you. Jay Powell doesn't care about stocks. True. He will send this market back to October lows. True. Agreed. He's worried about his legacy now. And don't forget, and to Larry's point, don't forget, he was not immediately reappointed as Fed chair under Biden. He has no love for Biden whatsoever. So I don't believe that he is going to have any loyalty to Biden. I think he's worried now about his legacy in terms of how will he be viewed in history? Will he be a Janet Yellen or will he be a Paul Volcker? Obviously, he's going for Paul Volcker. And when I go over the Fed's balance sheet tonight, you'll see why. Because this past week, one of our 30-minute chart club members, Pedro. Hello, sir. Welcome. Mr. Tim, good evening to you, sir. Okay, let's get to it. Let's talk about the trades that we took off this week. Actually, I need to begin with sharing my screen. That would be nice. At least my microphone's on. Okay, so I want to begin with NUGT, Nugget. So we put this trade on. All of these trades are long options trades, meaning normally I talk about options in terms of selling them, selling premium, generating cash flow. The problem is that volatility has come in so much, you're not getting paid. So you don't want to put that risk on. So since options are so cheap, I said, you know what? I says to myself, why not, light bulb, why not buy the options? You get, if you're right on the direction, you get directional move. If you're also right on the direction, since we're buying calls, we get call skew, an expansion of the implied volatility on the call side. So that's what we did. So on Friday, we opened up a long trade on Nugget. And there really was no setup per se, except for the fact that I knew that they were beating Nugget up really, really bad, and I was purposely not watching the chart. What was last Friday? 26th? 24th. 24th. So they killed Nugget in the morning. And so I says, let's step into the breach here. Out of the ashes rises a phoenix. They killed it hard, rising US dollar. And we kind of knew the dollar was going to correct. So if the dollar is going to correct, then they're throwing the baby out with the bathwater by dumping gold mining stocks. So we put on a bull call spread, also known as a debit spread, meaning we bought a deep in the money option, simultaneously sold a deep out of the money option, hedging our bet. And we were right on the trade. And we booked our profits on Monday, which was what, the 27th? Yeah, in here somewhere. So that was a profitable trade. Then we opened up a trade. We had been watching Adobe, the 30-minute chart club. We had been watching these charts very, very carefully. This is an hourly chart. Let's scroll down to a 30-minute chart. And we booked profits on this one today because it was simply a short-term swing trade. Now, the reason why we did it was that what you're looking at here are the lines in red. Those are your Bollinger Bands. The lines in green, not the middle one here, but the lower and upper in green, those are your Keltner channels. And when the Bollinger Bands trade within the Keltner channels, that sets up what you call a TTM squeeze or a potential short squeeze. Either way, there was going to be an explosive move in the opposite direction of the current trend, which was down. So we put on a long, another bull call spread. Again, deep in the money call option purchase, simultaneously sale of a deep out of the money call option. And didn't do much yesterday, but today exploded out. And we booked profits on strength. And you may be saying, wait a minute, why did you book profits so quickly here? Pretty simple. The reason is that despite the fact that Adobe is trading at what, 332 per share at the close, you would think that there would be a lot of demand for the options, that the markets would be tight. They are not. They are very, I won't say illiquid. They're not friendly markets unless you want to pay up to get out or get into an options trade or to accept a big spread, a big, what do you call it? A poor exit on your sale of your options. So the best thing to do in a market like that, when you have very wide markets between the bid and the ask, sell your call option if you're long on strength. That way it's easier to get out. Because if you're wrong, or if you wait for top dollar and the next day the options begin to decline, good luck getting out. So we sold strength, raised a lot of capital, moved to the sidelines, and opened another trade today, which was Amazon, again, using a bull call spread, being long of options. So we made around 11.5% in the past 2 days on Adobe. So a nice profit there. We did a quick trade on Tesla. Bought this morning, sold really quick. That was a nice swing trade. We are also short of Tesla going into the trading day using what you call a ratio strangle. That's the sale of options. I went very aggressive to the call side because we saw that Tesla was beginning to roll over. So I took a directional bet that Tesla would break. Let's get rid of these drawings. The bet was, these are the automated trend lines on TrendSpider, 35% discount code below. So Mr. Market and the trend lines and TrendSpider said, hey, listen, you got sellers above, a lot of them, multiple resistance levels above. So we had initially sold the 250 calls naked. And when I say I sold the 250 calls, that is a bearish bet on Tesla. We booked 50% profits there, rolled down to the 225 strike. Very, very risky. But it paid off. So Tesla shares broke today. So we made good capital there. We also opened up the other day Airbnb long. We're currently slightly underwater on this trade. So what we saw here, again, 30-minute chart. We opened the trade up here, and I saw a breakout on the 30-minute chart. Let's get rid of the... Okay, that's better. I saw a breakout, 30-minute chart on the 28th. Where was it? Here's 28th. Broke out. And no, we must have did it on the... Oh, here's the 28th here. Yeah. Saw a breakout. Breakout was rejected. And I spent the day, I was calling myself Bag Holder Bob. And the reason why I did that is because I have a rule that I break a little too frequently, and it's don't open up a new trade until the 3 p.m. hour, 3 p.m. Eastern Standard Time. Why? You want to make sure that whatever you're seeing in terms of a setup, if you plan on carrying the shares overnight, they don't fade by the end of business, by the closing bell. So I didn't obey my rule, and the setup that I liked failed, and I ended up paying the price for it. So we're down slightly on the trade, but we'll be fine. And if you'd also take a look at the chart here, we broke out today above this 30-minute downtrend line. Again, these are the automated trend lines, artificial intelligence, and we broke out near the close above this resistance level. Bad part is that we gave it up. This round circle here tells you there was a failure to hold it, and not that I needed that, but we may see a little bit of pressure tomorrow morning on Airbnb, but a solid day. We had a pretty sizable loss yesterday. We recovered a lot of that today. So Bag Holder Bob, yes, I got to get a shirt. Bag Holder Bob still until we make it profitable. Let's go to comments. Fed Bostic gave the market a bump today. Yes, he did. The thing about Bostic that you got to keep in mind is that he's a non-voting member. Okay, so keep that in mind. On a very short-term basis, VIX and spiders are, very, very tightly correlated. Yesterday they were 100% correlated. Today, initially they were correlated, and then actually no, VIX was up this morning, stocks were down. However, S&Ps turned around along with the Qs, and VIX traded down. But for a good portion of the morning, VIX was down along with S&P 500 until they turned it all around on Bostic. Does anyone else picture Bob talking to himself? Why do you got to do that to me live, man? That was good. That was a Larry. Larry would do that to me. Jedi, whoever's the name Jedi Kid, that's Larry. He does that to me all the time. Good one. TZ Burton. Hey, TZ Burton. I did not get a volume signal. What I wanted to, so I stayed out this week. Uh, so on the markets, I've been saying I think that short term we're going to get a rally. I think we are still going to get a rally, but folks, longer term, I mean, the structure of the bond market, of the high yield debt market, of the pension funds, of the banks now becoming quite concerning. And we're going to talk about that. But before we move on to what else we have to talk about, folks, with the exception of Nugget, I identified these trades like Amazon using technical analysis. And we do a lot of technical analysis on the 30-minute chart club. Let's go to the daily chart. I'll tell you why we got involved with Amazon. Not so much because of what the automated trend lines have to say, but what we identified on this chart here. We were in a descending wedge formation. Attempted breakout number one, rejected. Attempted breakout number two, we bought that breakout. And I may be looking to add more to Amazon on a continuation breakout above $95 per share. So this is another instance where we're taking advantage in this market. You need to know the options market. You need to know whether or not options are expensive or are they cheap. In the case of Amazon, it didn't make sense for me to tie up, all this capital to buy, say, 1,000 shares of Amazon when I could use far less buying power by putting on a bull call spread. So that's what we talk about on the 30-minute chart club. So please, if you're not currently a member of the 30-minute chart club, take a moment, scroll down. We meet a couple of times a week. Enter your email address. It's a private live stream. We stay focused on individual names. We try to keep it to a half hour. And we talk about very liquid stocks. We talk about strategies. We upvote our top 4 favorite awkward pause. Chrome. Slow as molasses. All right, we'll come back to that. Anyway, we upvote the top 4 stocks that we're going to look to trade, and we do that twice a week. If you're not currently a member, it's free. Enter your email address below. Private live stream. You can catch the replay. It's on YouTube. All right, let's move on. So, bond vigilantes. What's a bond vigilante? A bond vigilante is it's not one bond trader. It's a consortium of bond traders that get together and say, you are, meaning the Federal Reserve, you are not being aggressive enough with raising rates. Therefore, we're going to help you along. We're going to drive up yields on our own. And they have the power to drive up 10-year, 20-year, 30-year Treasury bond yields, which the Federal Reserve has a very hard time of controlling, especially out to 30 years. They can control short-term Treasury yields, but not the longer term as effectively as they can shorter term. So the bond vigilantes, when I first heard about them, was when I was first learning about the stock market in the 1980s. They were still being talked about from the 1970s and even the early 1980s when they were still a power to be dealt with. Now they're back. So for all the talk about pivot, about the Federal Reserve pausing on rolling off debt off their balance sheet, nonsense. This chart here is the 10-year yield weekly time frame screaming up higher. And while on a daily time frame, I'm expecting a pause, a pullback, if you will, in the next few trading days because we are somewhat overbought, and that'll allow for technology stocks to rally. And one of the reasons why I believe that equities rally today is because they're anticipating a pullback short term on bond yields. Now, when you take a look at where we're headed here on bond yields, we had broken down. I have a jittery mouse. I do not have the shakes. We had broken down. We had broken down back here, December the 5th, out of this rising uptrend channel or an ascending wedge formation. We consolidated. Now the resumption of the bull market in yields, bear market in bonds is back. And the reason why I think that the markets are able to rally right now is for a couple of reasons. One, I just stated, one being that the markets are anticipating a pullback, at least technically, on yields. Two, they are they're factoring in the fact that many of these large cap companies are highly capitalized. One. Two, they can afford to roll over their debt. Three, they're cutting heads, they're cutting costs, they're lean and mean. So they can absorb higher yields than what they could back here in October at their highs. So I'm expecting that we're going to definitely break through the 4.25 mark on the 10-year yield. I think we're going up to 4.5% before all is said and done. Will the markets hold up between now and then? I don't know. I'm not that smart. But we're going to talk about the chart that I'm going to be watching very, very carefully to identify when we will be adding aggressively to our shorts. And right now, we're only short of Tesla, and that's our only short, I believe. Yes. Okay. So, yeah, to M800's point, Bostic came out. Whatever he said, blah, blah, blah. Some of his comments were not bullish for the market. Fed has a ways to go in raising interest rates. That's not bullish. Higher rate endpoint could be needed. That's not bullish. If economy shows more strength. Okay. So he caveated that. So the economy is not going to see more strength. So maybe they interpreted that as being bullish. And I highlighted he's a non-voter, and the STRS market didn't budge on Bostic with a 25% chance of a 50 basis point rate hike in March. So by and large, they are still factoring in a quarter point hike in March and only 25 basis point move in March. Interesting. I thought it was higher than that. Clearly, the bond market is not in agreement. Okay. Now, as for the Federal Reserve, this is their balance sheet. It is fully updated. Let's make sure it's fully updated as of 3/1. And you can see Federal Reserve is not playing games here. They are rolling debt off of their balance sheet very, very aggressively. And they have been doing so since it'll be a year next month. And so this is why the markets can't make any headway. They can't press through resistance levels. And that's why I don't think that we're going to be going very far in this, what I believe to be a next rally in the market. The other reason why the markets may rally is due to the fact that, yes, I'm going to Paris. That is because of me going to Paris. The dollar is probably going to pull back. And why is it going to pull back? Core EU inflation unexpectedly surges to new record high. So the ECB is going to need to raise rates more aggressively than even the Federal Reserve, because the Federal Reserve started way before the ECB. So they're going to have to raise more aggressively. That's going to send the euro higher. The euro is the largest counterparty to the US dollar in the Dixie basket. Where does the dollar go in all probability? Down. What goes up? Gold, silver, the mining stocks. So very, very important data here. This is the stuff I live for. This is when my intercorrelated instincts kick in, meaning what doesn't benefit from this? In this case, the US dollar. What benefits from a declining US dollar? Simple. Commodities, emerging markets. End of statement. And to a lesser extent, US equities, which should rally on a pullback in the US dollar. Now, Credit Suisse crashes to a new all-time low after boosting deposit rates to reverse a bank run. They're having a bank run on Credit Suisse. Now, they're not the largest bank in Switzerland. I think it's UBS, I think it is. And while I don't want to be matter of fact about the fact that Credit Suisse is probably going to have to get nationalized by the Swiss government. So this bank is in all sorts of trouble. They have been for a long time. Here is Credit Suisse, Daily View, new all-time record lows. This is not going to last. Nobody wants to keep money on deposit with a bank that's trading like it's going bankrupt. Expect it to get worse. BlackRock. So we have Larry Fink, the guy that is going to tell us all how to live our lives with his Green New Deal, ESG nonsense. This World Economic Forum disciple just defaulted on REIT bonds. They're not letting people exit the fund. Their REIT funds are garbage, or this one particular one is garbage, and they have not. They have defaulted on their debts and blocking investor withdrawals. What's going on over at BlackRock? So hopefully Larry will be seeing the door very, very soon. Now, the forces upending global economy cannot be reversed. Very true. And I think that what we need to do, if you want to survive in this business, and that's what this is, what we do is we trade, right? If we don't treat it like a business, we will not survive. So there is a narrative being spun by the Federal Reserve, and that is that their target is a 2% inflation rate. Folks, we did 2% inflation rate before COVID. What makes them think? What makes them think that we're going to have a 2% inflation rate after COVID? We may have hit 2% inflation spotty before COVID, but not for any stretch of time. So their target is to bring us back to normal. Folks, there's not going to be a new normal. There's no new normal. The new normal is what has been traditionally been: higher yields and higher inflation. So the forces upending the global economy cannot be reversed. Very, very true. Deglobalization, yes, good thing to a certain extent. Definancialization, a very good thing. It is the financialization of the U.S. economy that has gotten us away from producing goods and from being self-sustainable when it comes down to war, not famine. I shouldn't say famine. Pandemic. We had to go begging for the Chinese for supplies, and they threatened us. They threatened not to give us the supplies if we blame them for the unleashing of the CCP virus. Real world scarcities that cannot be overcome with financial trickery. Yeah, there's no more papering over the structure. I mean, look at the 10-year yield. There's no going back. We're in a recession. We're in a recession, and bond yields are about to break out to highs not seen since 2007. So they want you to believe that everything was right with the world immediately before COVID. That's when we had the low three handles on yields, but look at us now. There's no going back to this. But they want you to believe that. They want you to keep the faith. Asymmetries that no longer can be papered over. I just said that. Nations eventually awaken to the risk of becoming dependent on others for essentials. The United States. And no onshoring, friendshoring, and reshoring can become national defense policies. Agreed. Never mind the corrupting neoliberal fantasies of everyone from kumbaya around the hyperglobalization and hyperfinancialization campfire. Their world is burning down. It's happening quickly. They still control the narrative in the media. It may not seem like they do, but they are losing control. These neoliberal fascists that are out there. And that is a really good thing. And it's about time that we got back to onshoring our manufacturing base and getting ready to defend ourselves in time of war and not have to worry about chips for our planes being imported from Taiwan, which just may very well get invaded. Let's do some comments. Bob, any thoughts on Tesla or Meta? Tesla, it closed above 190 today. I have a short position in Tesla, so I wanted it to close down below 190. It may bounce here a bit. If the markets continue this uptrend, Tesla, it bucked the trend today. They had that investors conference last night. Didn't go well. It's probably a 1 or 2 day sell-off. The thing that concerns me about Tesla, and the reason why I stuck with the short trade for so long, is that Tesla, I'm a big user of the stochastics. And while I believe that price and volume action matter most, right, we were a very tight wedge formation, triangle formation, call it what you will. But we also had this momentum was waning. And now we will probably be trading down below 50 on stochastics by the end of business tomorrow. Unless, of course, we get a big surge higher. Now, I'm pretty confident that they're going to rally Tesla back up to try to recapture this prior resistance level. Does it recapture? It all depends upon the market. If the market rallies for a few days and then stalls out and rolls over, no, then Tesla's going to roll over too. So I'm short term thinking that Tesla may get a continuation move up higher, assuming that equities rally in general. However, if the stock market rolls over, VIX moves up higher, Tesla goes down. Now, what I go over every night with members on Market Wrap is the yield curve. Yoga Mac, we'll go over Meta on chart request. I'm writing it down now. So the yield curve. Normally, I talk about the 30-year chart. This is the one you'll see me reference the most on the live streams. And the way we closed out the month of February was pretty horrible for the yield curve. We closed at the lows of, I don't know, 1980 on the 28th of February. We have since made new lower lows. I'm sorry, we did not. We ticked up. We have an inside month so far on the month of February. So what we've been going over on Market Wrap after the close each evening is the weekly chart. And I mentioned this, I believe, on Sunday night, that this time last week, actually, no, not this time last week, Tuesday and Wednesday of last week, we had a breakout on the yield curve above this resistance level. But by the end of the week, it sold off hard due to economic data. Now, what we're doing here in orange, we have the Keltner channels. And in prior tests of the Keltner channels, we've blown through the lower band of the Keltner channels like we did here, right here. We did it again here. We did it again here. We did it again here. Something changed here. Higher, low. We did not break down below the Keltner channel for long anyway. We ultimately then again broke down hard. Now, rally up to the upper band. Now we're just gently tapping the Keltner channel lower band. We're not blowing through it right now. Maybe it'll do it tomorrow. One trading day left to go. Maybe it'll do it tomorrow. But we're going to be watching this very closely, because what's happening here is that we are getting a narrowing of this downtrend channel, a descending wedge formation, if you will. Now, this is going to get resolved. The problem is it's going to get resolved to the upside, meaning we're going to blast out of this downtrend channel. Now, I've been warning about this for a long time now, and it hasn't kept us from buying equities. Everything I did, with the exception of shorting Tesla, has been bullish this week. And I shorted Tesla a couple of weeks ago, so it wasn't even this week. So my point here is that, going back to the monthly chart, and for the benefit of those who don't watch frequently, if you don't watch frequently, please join the 30-minute chart club, link below, email, private forum, and where was I? And we'll talk about the monthly chart here and historically what happens. I know many of you, Yoga Mac, TZ Burton, Franklin, Pedro, Larry, you guys hear me talk about this, Sean, you hear me talk about this constantly. But for the benefit of those that don't know, there is a storm coming. I don't make this up. This is not opinion. This is virtually fact. How do I know it's fact? Because history taught us that. Technical analysis is the use of historical patterns to determine the probability of future price action. It's not looking at a crystal ball saying, this chart is telling me X, Y, and Z is definitely going to happen. Is there a possibility that what I'm predicting is not going to happen? Absolutely. Is it a high possibility? No. The probabilities are extremely high, using the historical data from the yield curve, that we are about to get a crushing blow to this economy, to the stock market. Are you ready? Do you have the liquidity to survive it? And that's why I hope that you're here to understand how we plan on trading this. And I plan on seeing higher highs in this market in the short term. This is not a doom and gloom live stream. I am giving you short-term micro view and longer-term macro view of what is on the horizon. In short, you could jump on and off the tracks 1,000 times before that little light at the end of the tunnel, which is a train off in the distance, gets closer and closer and closer. You try doing that when that freight train is directly in front of you, you're going to get crushed in all probability. So for the benefit, again, overlaid here in silver or gray is the S&P 500, the yield curve in candlestick. You don't worry about the yield curve inversion per se on a historical basis. This weakness is not typical of the inversion of the yield curve. Equities have typically made higher highs with an inverted yield curve. Different this time. But typically what will happen, as we've seen in the past, once we begin to steepen and begin to move higher, and in particular in this gray zone here, which I highlighted, things get real fast. And that means that equities in all probability are in free fall. Are you ready? Do you have the capital? Are you watching this every single day? Because it's going to happen quickly. And that's why we're looking at the weekly chart every single night with members. What did the yield curve do today? Did it tick up? Is it breaking out? Trade accordingly. Trade accordingly. Let's do some chart requests. On that happy note, let's do some chart requests. All right, we have Meta for Larry. For Yoga Mac. Let's go to the members area. We have Donald. I didn't see your request here. Sorry. XOM. What else do we have? Okay, Netflix for Pedro. What time frame, Pedro, on the TTM squeeze? $30-minute chart? Probably not, but you never know. MSTR, SM. Nah, it's not going to be on a daily. No, I'll show you. It's to have a TTM squeeze. It's a very rare event. Bob has a PhD in. That's that. I'm going to print screen that. I may just get a T-shirt made up. That's too funny. I just saved that, Yoga Mac. All right. That's too funny. All right. TZ Burton. I wish Janet Yellen would say that instead of going to the Ukraine. Yeah. I wish they would keep her in Ukraine. She's the best and brightest. All right, let's do this. Folks are going to be using TrendSpider, artificial intelligence in your charting software. And now it's even hooked up. These guys, I knew they were going to do it. I met them back in 2017. And now they even have it. They sent me an email, as a matter of fact. Hold on. They sent me an email because they now have another division. I know I saved I get so many emails. Let me see. Yeah, let's try it. I'll show you the new service if I could find it. Here it is. I'm not sure if they own this or if they're partnered with them. But Signal Stack, I haven't learned a lot about it. I'm probably going to meet with them and learn more about it. But what you do is you you can now, because they have bots here, and actually I set up one here. I created a trading bot. I think it was a 15-minute time frame. I don't know whether it's saved or not. But you can now, when your alert fires off, obviously you want to back test your alerts first so you don't lose money. But once you've back tested your alerts and you have a good system worked out, the alerts are tied into Signal Stack. And if you have any of these brokers, they're all tied into Signal Stack. So if you want to check it out, please do so. I don't even know if oh yeah, Dan Ushman. Dan Ushman owns it. He owns TrendSpider. So yeah, they own it. Check it out at your free time. It's pretty interesting. I'll toy around with it, but they're booming, man. I mean, the AI, it's coming, it's here. So if you want TrendSpider, 35% discount code, automated trend lines, Amazon, you would have known to get out of this trade. Here, watch. No automated trend lines. Now you have trend lines back here. February the 8th at just about $100 a share. We just bought into it today at $92, actually 91 and change. So TrendSpider, 35% discount code below. All right, let's get to it. Meta. I was looking at Meta earlier. You could see that we were in a downtrend. We went sideways on it. I like that. Here, the automated trend lines picked off. You have resistance above. Now we've dropped down and into a consolidation range. I would use a stop on a break below 167. But I think that we're going up here on Meta. And I'm starting with a daily chart. I never do that. Bad habit to get into. So I'm going to pause here and go to the weekly chart. Okay. Definitely don't want to break my habit. So you can see that we're setting up very, very nicely here on Meta. I'm liking it. Let's do a check of how expensive the options are. Tesla's getting hit after, oh, not really. It's down 85 cents. I'd like to see it close out the after-hours session down below 190. VIX is popping after hours a little bit. 10-year yield, holding that 4 handle, man. 4% is now a floor. And that happened very, very quickly. Okay, Meta. Wow, options are really cheap. Options are IV percentile at 15%. Let's check out the IV rank. Really cheap. My preferred thing to do is to sell premium, not to buy it. But in this environment, they're so cheap, I can't make an excuse for why not. I get a better return on capital by buying the options right now, and it's a reduction of risk. I want to check the IV rank here because the IV percentile is the how expensive it is over the past 2 weeks. Oh man, so cheap. IV rank. Oh my God. I would definitely be a buyer of the options. You could see they killed volatility in here. So I'd be a buyer of the, oh, that's spiders. I'm sorry. Duh. Bob. All right, so not much difference here. 8.1 on Meta. I think the way to trade this is to buy a call spread deep out of the money. Bare minimum, think May. That way you eliminate that time decay or you reduce it. So weekly chart looking really good here. I think we're breaking out. Daily view. Daily view, we've already broken out. We broke out on the 28th. Now we're consolidating sideways. I think this could be bought. Stop loss right below 120, 167. And you add more on a breakout above 178.13. All right, we're good to go here. So Meta bullish. Exxon Mobil. Weekly chart. I'm not a buyer here, but I like the chart. So your momentum indicators, the stochastics on a weekly time frame, are going in the wrong direction. They are declining. So momentum is waning. Now, the price action is still fairly strong. While there's not a lot of momentum to the upside, there's not a tremendous amount of pressure, selling pressure to the downside. So we're holding support here. What I do like is that you are beginning to see the setup for a TTM squeeze. Again, as a reminder, Bollinger Bands in red, closing in and trading below the Keltner channels. The tighter those Bollinger Bands get, the greater the velocity of any move in either direction. So this is a promising chart. Were I long it now, it's paying a dividend. I'd stay long of it. I'm not seeing a lot of downside risk here, unless, of course, oil collapses. Daily view. It looks like it wants to pop here. For a swing trade, if you want to trade it on a breakout, that would be okay. But I see one thing setting up here potentially that's concerning. But first, we'll stay bullish. Here's your resistance above at 112 per share. There's a little bit of a bearish view, a potential bear flag setup, meaning we're just drifting up. If we break the support level, you got to get out. So again, these are my manually drawn trend lines. These are the AI trend lines. Boom, gone, back. Now we know there's a floor below, and if that breaks, get out. So Exxon looking good. Bob, what do you think about Public Square going public this week with a SPAC? I don't have the symbol. TZ Burton, I am very honest with what I know and very honest with what I don't know. I don't know much about Public Square. I've traded SPACs, DWAC, a few of them. We did very, very well, but I only traded them all for the technicals. So I don't know much about it. I would refer you to somebody that's far more educated about the names. I don't know the symbol either, but it's probably not listed yet. But we can always take a look at it a few weeks after it goes public, so we have some data to analyze. But right now, I have really nothing to offer that's wisdom, zero. I would just be blowing hot air, and I don't want to do that to you. The one thing I will say is that is that um, I don't like speculative bets going into a speculative market. Were we in Public Square? Is that the same company, Squarespace? Or is that a different one, Yoga Mac? Okay. Uh, it's a speculative market. I don't like IPOs of any type in a speculative market. So I'll just be careful there. Uh, what else we have? Netflix. Do we have a TTM squeeze? No, because you see, this is a daily chart. See how wide the Bollinger Bands are relative to your Keltner channels? If these, let me see, you had a TTM squeeze back here in September of 2016, and it stayed that way for a while, and then it blasted off. It got resolved. Another instance, very brief but explosive nonetheless, was a TTM squeeze back here. So no, we don't have a TTM squeeze right now. Netflix today did not trade well with the rest of the market. It was down. It broke daily support. I'm not loving it. We were short. I covered shorts last week. Would I reshort it now? No, not yet. If we close down below 313 per share, I would entertain shorting Netflix yet again. MSTR, MicroStrategies. Any word on them divesting any Bitcoin assets? Anybody know? I know Michael Saylor is no longer there because of all those Bitcoin assets. All right, so weekly chart. They really haven't benefited much from the rally in Bitcoin. So for those that are not familiar, MicroStrategy is levered up, meaning they borrowed money to buy Bitcoin at the top. But they haven't had a huge move. I guess they have. To be fair, you know what they have? The shares were as low as 135 in January to a recent high of 289. No, that's to be fair. They have had a move. Okay. So it looks okay, but if you're trading MSTR, you have to be a believer in Bitcoin. And if Bitcoin's going down, you do not want to be an owner of MicroStrategy. Bitcoin weekly chart, an inside week, consolidating. Looks okay. A little bit of weakness here. Didn't trade with the market today, but it looks okay. Putting in higher lows, higher highs. So I would be a buyer of MicroStrategies if and only Bitcoin begins to break out as well. Heavy correlation between Bitcoin and MicroStrategies. You can't avoid that fact. Yeah, he's been gone for a couple of months now, a few months now. He was shown the exit door. Thank you, Franklin. Have a great night, my friend. MSTR daily time frame broke support today, so beware. Broke support. Not loving it. Watch Bitcoin. If Bitcoin recovers, MicroStrategy should recover, and then we'll revisit the trade. Right now, I would avoid it. Last chart up for tonight, SM Energy. Interesting chart. Weekly view first. We're in a wedge formation, a descending wedge formation. I'm loving the Stokes, high or low. They're not hooking up yet. We could do this backing and filling action for the next few weeks, or we break out tomorrow. I'm not quite sure, but right now we're in a declining or descending wedge formation. No breakout yet. Daily view. Here's a perfect example of when you had a TTM squeeze and it went the opposite direction. It broke down, and that no longer exists. That TTM squeeze, so it's been invalidated. Uh, it rallied today. You have resistance immediately above. I wouldn't be a buyer here. I would reference the weekly chart, and all I would do is this: I would set up 2 alerts. One down here, because we're in a downtrend channel. Why is this not letting me set? I have we work around the AI. How dare you deny me? Okay, here we go. Touch. A little bit of sensitivity. A little bit. A little bit. SM weekly support. Okay. And you keep this active for a while. Then you set up another alert up here, because once you break through, and here we're not using any sensitivity. All I care about is a close above resistance, not a flirt with it, not a touch and a back off, none of that nonsense. All we care about is a close above weekly resistance, and then we buy more. And that, my friends, is the shot. Our alerts are set. We use a rules-based approach. If this, then that. If these alerts don't fire off, we don't trade it. When they do fire off, we reevaluate, make sure our thesis is solid, then we enter the trade. So, folks, if you're not currently a member of the Contrarian Trader 14-day free trial offer, use the link below. You get TrendSpider for free silver and gold level memberships. If you're not ready to join my service, simply join the 30-minute chart club. Get to know me, get to know my private live streams, and take note. How accurate am I? Am I inaccurate? Then you don't join my service. If I'm accurate, then maybe you want to join the service. Okay? That's the way to find out. And if you're not ready to join my service, at least get the 7-day free trial offer, TrendSpider. If you decide at some point in time in the future that you're going to join my service, well, you cancel with them. We do it all the time, and you join with me, and we get you on board for free. Pedro, have an awesome night. Be well. Jeff, have a great night, pal. And advocacy, love it. R Train, thank you, sir. Have a great night. TZ Burton, he got mad at George Gammon on an interview a few months ago. Yeah, I didn't see that interview. I need to go back and check that out. Yeah, I bet Gammon leaned into him. That's good. I like George. All right, guys. Everybody have an awesome night. I'll talk to you tomorrow. Be well.